Let's talk to Federico Bentley. He is a sales trader at Ayondo. Very good morning to you.
Good morning.
Right, 9 thoughts-provoking slides to whiz through. Without further ado, let's get you on the rock and roll. Pre-selected portfolios, slide number 1. What is this all about?
So this is a little bit different. This sort of a new implementation that we have for new traders, I guess, when they're looking around for sort of top traders. A lot of the time they'll go to the rankings list and see, number 1, he's the most popular, so we'll just follow him. That's not the best thing to do. So what we have is sort of a suggestive portfolio. Obviously, this will be different for each client. So what it gives you 5 traders overall. Everyone's looking at a different product. So you do have diversity. So it might be looking at sort of fixed income, some equities, some commodities, maybe gold as a safe haven, some FX, and maybe some different indices. So at least it's giving you sort of a diversified portfolio. Okay. Sometimes people go wrong. They might follow 5 guys who are all trading the DAX or all trading one product. So that, if it goes down 1 or 2%, you're being affected, times 5 in a way across all the different traders. So it's just keeping it sort of diversified with social trading. It's the main thing, I think.
Understood. Okay, so let's move on to the new day trader then. What's this?
Yeah, so this guy, well, his name's interesting. I think he's trying to say Einstein.
Okay, very good.
He's only been with us since January, so it's only been about 10 months. He's up about 33%. He's more of a day trader, which is nice. A lot of our previous traders, sometimes they hold positions for too long, and sometimes people don't like that. They like something more refreshing, someone who's in and out, so you don't have that sort of overnight risk. He's trading about 30 times a month, so not too heavily. Fairly low drawdown, low volatility. Sharp ratio is about 2.5, which is quite attractive. Anything above 2, usually would like the look of. But what's impressive is the products that he trades are all fairly different. It's almost quite US based. You've got some gold, you've got some US equity, US equities. You've got the Nasdaq, Dow Jones. So it's all sort of different products, which you'll see on the next slide.
Well, up 30%, pretty impressive.
Yeah, 33% for the year. A lot of people have been struggling this year. So he's obviously outperforming them fairly attractively. And you can see, on that sort of asset allocation, it's all different products. He's only got about 4 positions open right now, gold, silver, and a few equities. So it's nothing too drastic. He doesn't tend to hold them for too long, maybe a couple of days. But the risk per trade is normally fairly low, normally well below 1%. 0.5% or maybe less.
Understood. Well, clearly he's doing very well. Right, let's move on to the FX spread reduction and reduced stake sizes.
Yeah,
What's
so
this all about?
Sort of across the whole board. We've actually reduced the sort of FX pairs across 9 FX pairs. We've reduced the spread. Something like sort of Aussie dollar, 1.5 to 0.8. It's quite a big reduction. A lot of people sometimes are used to getting maybe 0.8 on euro dollar, so we've reduced it to spot 7. Dollar yen's quite a good one. There's a lot of people trade that, but when it's 1.5 spread, people find it a little bit too high, so we reduced it to spot 9. But with the difference with us and other brokers is that we do offer fixed spreads. A lot of other brokers have variable spread, so depending if Donald Trump's speaking or there's some type of volatility, their spread could go from 0.8 to suddenly over 1.
Right.
With us, it's fixed at all times, so at least you know what you're getting. And obviously with ESMA that came out in August, a lot of the retail clients have to put down a lot more margin. So what we've done to sort of accommodate that, we've just reduced the stake sizes. Normally if you're trading, let's say the DAX at £1 a point, we've reduced that to 50p a point. Alongside the FTSE as well. So the barriers to entry are a lot lower now. Obviously with the ESMA changes, a lot of people have struggled and that they can't trade like before. So if you just reduce the stake size, then you can hopefully trade a little bit more.
Understood. Okay, so let's move on to the Ayondo Pro Platform. What is this?
Yeah, so what we've done, this is just for professional clients. Obviously, when ESMA came out, retail clients are affected. If you're a professional, then you're not affected by the high leverage. So obviously, you've got to reach 2 out of the 3 main criteria, trade 10 times quarterly, have an investment portfolio of over $500,000, or if you've worked in the financial industry for at least a year. So if you tick 2 out of those 3 boxes, then you have access to this Pro Platform if you do have a professional account. We sort of changed the layout to make it a little bit more, I guess, accommodating for sort of professional traders. The main difference now is that we are sort of offering some type of rebate system, which will sort of further reduce the spread and some sort of reduction in financing, which does help, especially for sort of long-term traders who might be holding equities on long term or some Dow Jones positions that you're holding.
Okay, so let's go into the next slide because I know that's on the rebates.
Exactly. So here, it's a difference. Well, you're getting a 10% reduction for the first 200 million. So this is a notional spread. So as soon as you start trading, you're getting almost a 10% reduction. So if you're trading, let's say the DAX or the Dow, the DAX has got a 1-point spread. If you're trading that straight away with the rebate system, you're getting a 10% reduction. So you're essentially getting 0.9 as a spread, and that's for the first 200 million in notional. Anything above that, you can get 15% for FX indices, And obviously commodities, you can see there, sort of 5% for the first 200 million, and then 7.5% for the above 200 million. With equities, a lot of brokers, they don't offer sort of rebates, but what we're doing, we're just reducing the spread. Normally we offer 10 basis points, so we've reduced that by 20% to 8 basis points. So it does help overall, it just makes things cheaper. And you can see on the right, if you're trading cable at, let's say £100 a point, that's got notional trade of 1.2 million. So that will contribute to that sort of a rebate system.
Okay. Right, so let's move on to the reduced financing rates. How does this work?
Yeah, so obviously if we charge a 2.5% financing charge, which a lot of, this is for overnight costs, which a lot of brokers tend to have that. Some may even charge 3%. So this is all about your account balance. If, in your account, if you have between 100,000 and 250,000, you're getting that down from 2.5% to 2.25%. Anything above account balance of 250,000, you're pretty much getting a 20% cut, and that will be down to 2%. The difference here, I guess, is just for long-term traders. The longer you hold trades, obviously, you might have some financing for 6 months, a year, however long it is. So it really does help sort of reduce those costs. So overall, it's just sort of a cost-cutting way to help the clients. And obviously, this is sort of in line with the Pro platform. With a lot of other brokers who do offer a Pro platform or a platform for their professional clients, what they don't actually include is the zero balance protection.
Right.
They lose that zero balance protection.
Okay.
And with us as well, we do actually offer that to professional clients still. So you still have that protection alongside.
Very good. Let's move on to the next slide, investing with Ayondo.
Yeah, so this is sort of similar to an ISA, I guess, a nice alternative or sort of a stockbroking account like, the likes of IG have. With us, it's simply down to the margin. So usually if you're trading an equity, you might have a 20% margin. But if you're looking to hold it as a long-term investment, you want to hold your FANG stocks, you want to hold your Apple, your Amazon, you simply increase the margin from 20% to 100%, which means you're not actually trading on leverage. So you're not borrowing any money. You pay the spread, the commissions, which is the same with your bank or anyone else, and you can hold that position for as long as you want.
Right.
And especially when you're looking at it as a nice alternative, usually the ISA limit is 20,000 a year. That's how much you can put in. With us, you can put as much as you want, and you're still not paying any of the capital gains tax. So any profits, they're tax free. Especially with UK stocks, you still receive 100% of the dividends. So that's one of the main benefits, I guess. Not enough people use, especially for the long term, because everyone might hold shares through their bank or their broker, but using Ayondo for this, this potential, I guess it makes a lot of sense.
Understood. Let's wrap up with the final slide.
Yeah, I guess it's just a quick example of how you can do it. Obviously, on the deal ticket, you can see on the left, this is how you'll be trading with margin, but at the bottom, if you slide it all the way to the right, then you've got 100% margin. You're not trading at leverage. You're pretty much, buying the share in it in a way. You don't actually get any of the. Well, that's kind of how it works. You slide it to.
And would you pay stamp duty on the right-hand side there?
No stamp duty.
Fine.
Because technically it falls under a spread bet,
Yep.
so that's why you're not paying any of the tax. No stamp duty. You hold it for as long as you want, and all you're paying really is the spread.
Right. On that note, Federico, thank you very much indeed.